Hello, everyone. This is Eustace Leon Greaves, Jr., your insurance and financial services advisor, owner of Greaves Financial Services and the Bridge Insurance Agency. You can call me Coach. Folks, as you may recall, past couple of days I've put some videos on the Greaves Financial Services channel here regarding the Deficit Reduction Commission's plan or suggestion to, at first, kill the mortgage interest deduction that so many Americans take on Schedule A of their income tax returns. Pardon me. In the first one, I discussed how devastating it would be, and then in the second video, I showed the results from two tax returns that I prepared, simple basic tax returns, one showing the effect of not having that deduction to take on the person's income taxes or the family's income taxes. And in the second one, the beneficial results of having the ability to take the deduction for the interest you pay year in, year out on your home mortgage. In their wisdom, the Deficit Reduction Commission had made a proposal that instead of the now $1 million limit on the amount of outstanding mortgages on which you can take the mortgage interest deduction, they were saying that what we'll do is reduce that to $500,000. To me, this is a double-edged sword. While it might sound wonderful, there are a lot that might only work, that will only work if it goes into effect for mortgages, say, starting in 2012. I can't tell you the number of mortgages out there that are in excess of $500,000, $600,000, $700,000, ladies and gentlemen. And there's no way people are going to be able to pay those down anytime soon. So we have to give amnesty on all those earlier mortgages and not put a plan like that, should it come to fruition, anytime before, say, before January 1st of 2012 or January 1st of 2013 for mortgages that will be made after that time. I think it'll be just too devastating an effect on the housing industry right now. And in fact, one of my future videos, Michael Corley of Corley Realty Group here in Brooklyn will be coming in to talk to us and talk to me a little bit about what the housing market looks like here in Brooklyn and how something like that would completely destroy could destroy the housing market in Brooklyn. Now, late breaking news, the commission failed to get the necessary 14 of 18 votes necessary to bring this issue up for a vote in both the House and the Senate. So for now, it's a moot point, it's dead. However, they did get 11 out of 18 people saying yes. This is not going to go away. We do have a deficit. My suggestion is this, because I was racking my brains and wondering how could we solve this problem. To me, it's simple. Let's apply the law as it applies now. You can deduct mortgage interest. I'm going to make this very simple. You're allowed to deduct mortgage interest up to $1 million on your first and second homes, as long as it's for substantial improvements, repairs, or the substantial improvements, repairs, the purchase, the building of a property, not financing college educations, not going on cruises, going on vacations, buying clothes, buying all new furniture for the house. Believe me, ladies and gentlemen, the Treasury Department, if I know what I think I know, the Treasury Department is going to start insisting that proof be given in some way, shape, or form of how money used for refinancing a mortgage, for example, was used. And if it was not used for, again, purchase, substantial improvements, repairs, the building of a property, guess what? You're not going to be able to deduct all of the mortgage interest that you can now. And again, I would suggest to the powers that be that an amnesty or a moratorium for past mistakes be given, but rather an amnesty, and that we bring this into effect, say, beginning with the filing of either the 2011 or the 2012 income tax returns. So again, right now it's a moot point. Your deduction is safe. You can go back to reading about the baseball, who's going to be the next billionaire in baseball. But keep in mind, there are those who are looking for ways to reduce the deficit that our country suffers from. Right now, 40 cents of every dollar we spend, we borrow. That can't go on. So at some point or another, we're going to have to make some changes. So until that time, though, I will do my best to keep you informed as part of my mission here at Greaves Financial Services, the Bridge Insurance Agency, and our blog, Brooklyn Covered. I'm sorry, brooklyncovered.com, which will be up and running by Monday, December 6th. That's the kickoff date for that. Also, for those of you who will be in the Prospect Heights area, we will be unveiling our Christmas windows tomorrow evening between 6:30 and 7. Not quite as fancy as the Rockefeller Center deal, but what can I tell you? It's my office. So listen, until we speak again, God bless. Happy holidays for whatever holiday you celebrate. And remember, always make it an outstanding day. And it's up to you to do it. Take care.